Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, December 10th, 2019. We again find ourselves in the final hour of the trading day. As I mention each day, I believe that the prices, just as close as you can get them to the close of the market, are the most valid prices of the day, and that's because during the day you have the algorithms, you have the day traders fighting it out. I consider it a lot of noise at the end of the day. Particularly in the last few minutes, you have the large financial institutions, the market makers making their end of day bets. They are the most well informed, they have the best technology, and in my opinion, they have the best idea of what the closing price should be, and they move it in that direction. And so that is why I make the majority of my buying and selling decisions at the end of the day, because I think they're the most valid prices. Plus, it frees up your day. You don't have to sit in front of your computer all day, make impulsive trades, right? So anyway, thank you all for coming. I appreciate it as always. It's nice to have you here. There's a lot of things you could be doing other than sitting in front of your computer watching my live stream. So I really do appreciate you taking the time, and I do hope you're learning something. I hope it's helping your trading and your investing, and that you're getting some kind of return on your time investment. So, all right, well, the market is slightly up. The Dow Jones up 10 points, NASDAQ's up 6 points, S&P's up 0.32 points, so kind of a dull day. Futures were down quite a lot last night, and then there was some news that came out that the tariffs with China may be delayed, and that kind of rescued the market. Otherwise, I think we would have had a pretty strong down day today. So anyway, let's take a look here. Evan, hey buddy, good to see you, sir. Thank you for coming. Always nice to see you. Shelton Johnson, good afternoon to you as well. Thank you for coming, Shelton. Appreciate it. William Green, hey, how you doing? William says, good afternoon, sir. Good afternoon, everyone. Good afternoon to you, William. Nice to see you. So, all right. Hey, I'm just going to mention I have a group of contractors here. They're putting up my awning that collapsed on Thanksgiving, and lots of power tools at work. And it just happens to be right next to my office. So, hope you can bear with me if you see that, or if you hear all the noise. They've been more quiet recently, so maybe they're done with the heavy equipment. I'm not sure, but if it's loud, you'll know why. So apologize for that, but bear with me. Got to get that awning back up. All righty, so listen, the plan for today, as usual, first of all, we're going to run the U.S. legal disclaimer. We're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, what my thinking was, what my methodology was, what my approach was to entering the positions, and then I'll talk about how I'm going to manage them going forward, either to the upside or to the downside. After that, we're going to do a few minutes on trader psychology. It's very important that you develop the skill of discipline. Really, that's what it comes down to. I mean, it's important that you learn the technicals. It's important that you learn about support, resistance, entering, exiting. Of course, that's important, but that all distills down into creating a plan for yourself. But creating a plan and following your plan are two different things. And if you don't follow your plan, you are not going to be a successful trader. That's all there is to it. So, think about the ability to follow your plan as a skill that you have to develop. When you first start into trading, a lot of people can't follow their plans, but if you understand that it is a skill and you start deviating it, just think to yourself, okay, this is a skill. I need to work on this skill. So that's why I like to talk about trader psychology every day, and we'll do a few minutes on that, and hopefully it will be helpful to you. After that, we will go through each stock in my watch list. We'll look at the support, we'll look at the resistance of each stock, we'll look at indicators such as MACD, RSI, moving averages, ATR channels, and the way that I view trading is I view each indicator as a potential group of buyers, and if you want a stock to go up, you have to be in the company as many buyers as possible to give you the best chance to have a profitable trade. trade. So if I look at one indicator, I look at it as one group of buyers. If I see another indicator lining up with the other group of buyers, then I look at it as two groups of buyers. So I like to look for a confluence or a combination of indicators lining up. Or another way to say that, I like to look for a combination of different groups of buyers lining up. So that's what I look for when I look for my potential entries. Now that's step one. Step two, even after you have a confluence or a combination of signals or indicators, you have to make sure it offers you a good risk to reward. And so, how far can it move up until it finds some significant resistance compared to how far will it move down where I have support and I'm wrong, or if it breaks that support, right? So step one, look for a confluence or a combination of signals. Step two, you have to make sure that it has a good risk to reward ratio. I like to have at least 2 times to the upside than what my downside is. So if I'm risking $100 to the downside, I want to be able to make at least $200 to the upside. That's very important. That's step two. And step three, make sure that the positions you have are not too highly correlated. You don't want to have 5 tech stocks in your position. It's not like having 5 different stocks. It's essentially like having one huge position times 5, right? And you want to have diversification. You want to have some stocks, you want to have maybe some tech, maybe some tobacco, maybe some healthcare, maybe some autos, right? Maybe you want to have some gold, and maybe you want to have some silver or oil or bonds. You want to have diversification. You don't want to put all of your eggs in one basket. So step one, look for a combination, confluence of signals. Step two, make sure you have a good risk to reward ratio. Step three, make sure you don't have too many correlated positions of stocks that are in the exact same industry. So I'll go, with those 3 criteria, I'll go through the watch list. If I can find something at the end of the day that meets all the criteria, then I will go ahead, purchase it right before the close of the market. Then after the market closes, if you have any questions or comments, you need some clarification on anything I said, please let me know. Don't be shy. Type it in the chat. I'm happy to answer your question, hopefully clarify your question. If you have any stock symbols that you would like me to take a look at, I'm happy to give you my humble opinion and break the stocks down for you. If you have a particular stock that you think would be helpful or useful to the group, and if you want to get my opinion on the chart before the market closes, please go ahead, type it in, maybe put a little star by it or something so I know it's time sensitive. All right, so that is the plan. And again, if you hear a lot of construction noise, I apologize. They're right outside my window here, and they're putting up my awning, so hopefully it won't be too loud. But if it is, hopefully you can bear with me. All right. So, all right. Well, hang tight. I'm going to run the U.S. legal disclaimer, and I will be back shortly in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Hey, Frank is here. Good to see you, Frank. Thank you so much for coming. Frank says, hello, Greg and group. Rule 1 of my plan is to protect my capital. Rule 2, reread Rule 1. You're so correct, Frank. Listen, we're in the business of managing risk. We are not in the business of trading. Number 1 rule, always, always, always protect your capital, right? As soon as you get to the point in your mind where you are throwing caution to the wind, you're dead. I'm telling you, always, 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 number 1 priority, make sure that you are protecting your capital. And how do you do that? You cut your losses short. And in the psychology section today, that's exactly what I'm going to talk about. So very true, Frank. Thank you for bringing that up. Evan, hey, buddy, what's going on? Evan says, I'm curious your thoughts on AT&T today. Well, let's take a look real quick. Yeah, Evan, I like it, actually. I like it. We closed below the 1 ATR channel. We rallied back into the channel. We've had a couple days of down. We've had a beautiful V1 here. Looks like MACD is getting ready to close above. I quite like it. As a matter of fact, I'm going to run the numbers on here because it's one of the better things that I've seen today. Let me see here. Evan, he finds good setups. Let me tell you what. Thank you for that, Evan. So yeah, let's put that here so we watch that at the end of the day. But again, you know, we were overtaken by sellers. Here we're overtaken by buyers, right? People bought this. Now that it had this nice move up, the people that bought here are going to be looking to sell if it starts getting weak. Well, it started getting weak here. Sellers overcame buyers, right? The people that bought here probably sold in here. That's what caused it to come down. But now a whole nother group of buyers came in. So we don't have to worry about people buying here selling anymore. They already sold here and here. So this is great. I mean, this is a higher low V1 in the value zone, above 50 currently, above the moving averages in a MACD crossover. Excellent, excellent, excellent. I really like it, Evan. And I think Evan's had some good trades today as well. So we'll be looking at those in a bit. But thank you for that, Evan. I'm definitely going to watch that. Hey, Donnie Robbins, what's going on, my brother? Don says, hey, Greg, it's me, your favorite student of all time. Yes, it is. Donnie was one of my first students. Boy, did we spend a lot of time, didn't we, Don? We spent months. So that's great. I used to date Donnie's sister. Remember I was taking care of the little puppy? And then the puppy was heading off to Hawaii. That was Don's sister that I was doing that for. Great to have you, Don. Good to see you, buddy. Let me know if you have any questions. A Man Solo, hey, how you doing? Good to see you. And we have a couple trades from Man Solo we're going to take a look at. Gamer Squad, David from Denver, how you doing? Good to see you, sir. Hope everything is well. Thank you so much for coming. Gamer says, what do you think about CIB? Still missing some side action. Let's take a look. Okay, now David, when I talk about sidewards action, that's when we are above the 1 ATR channel, we come back into the channel, that's when we need the sidewards action. I know it can get confusing, but when you come from under the 1 ATR channel and then you rally into the channel, then I'm not looking for sideways action. I'm looking for a couple days down before I take the trade. I hope that makes sense. Boy, I'm trying to think of current trade that we had. Oh, well, let me show you. Here's Philip Morris. See how we're above the 1 ATR channel? Then we need to come back into the value zone. Then we need sideways movement. If you start above the 1 ATR channel, come back into the value zone, this is when you need the sideways movement. And this is the trade I took here with the V1. Compared to CIB, see how we started under the 1 ATR channel? We rallied into the value zone. Now, I'm not necessarily looking for sideways action. I'm looking for a couple days down before I get a higher low V1 or V2. So there's a return to value V1, V2, and there's a higher low V1, V2. So personally, I don't think this has enough, doesn't really have 2 days down. Compared to AT&T, see how we were below the 1 ATR channel, we rallied into the value zone, we had a day down, and now we trigger. Let's see, the close is 38.04. So that is our trigger point on this trade. I like this trade. I like this trade, actually. So I hope that makes I hope that makes sense, gamer. Dave, Don says, you too, man. Thanks, buddy. Andrea, hey, how you doing? Good to see you. Thank you so much for coming. It's nice to see you again. Anyone using Thinkorswim, I'm having trouble figuring out how to set up the ATR channels on there. Actually, I don't know if Jesse is in here today, but Jesse is a Thinkorswim master, Andrea. So if he shows up today, let's ask him. I don't use Thinkorswim, but and a couple other people, a couple other my students have used it. So I'm sure we can get you an answer. Let's see if Jesse shows up, and we'll ask him. Okay, Andrea? He's very helpful. Okay, Gamer says, I think I got it this time. All right, well, let's quickly go through my positions. Kind of an interesting day. Some of my ups are down and some of my downs are up, unfortunately. But, pretty close to a break-even day, but somewhat frustrating for some reason today. All right, so Beyond Meat. I did buy Beyond Meat back here on the 5th of December. I bought it when we went under 30, over 30. We also had a positive MACD. We bought it here at 73.59. Next day it went screaming up for us, which was fantastic. Did hit a profit target, took some profits off the table. As you know, when the stock goes up for me a certain amount, I like to take a percentage of my position off. I can lock it in. The market can't take it away from me. And if it goes down after that, then it helps mitigate my loss. So we had a great day up, took a profit target yesterday, boom, right back down. Unfortunately, right? Today we are up a little bit. My stop on this, I'm not going to wait for a close under 30 because Beyond Meat percentage-wise moves so much. So this is essentially a V2. Here's day 1, day 2 washes out day 1, day 3 closes above day 1. Halfway of this washout bar or close below halfway of this washout bar, I'll go ahead and just take the position off. And but so far, profitable position is up today, has not hit one profit target. So we'll see what happens. All right, as you know, I don't do a lot of shorting. I think I've probably shorted 5 times this entire year, but I did like this short here. Yesterday, we went above 30, above 70 RSI, closed under 70 RSI. We went above the third ATR channel, closed below the third ATR channel. We had a negative V1 to the downside or a bearish V1. Here's day 1, day 2 washes out day 1 and closed back below. This is also bearish. We had a false breakout to the upside. Yesterday did make a new high and then come back down. So all sorts of signals. If I'm not going to short this, I don't know what I would short. But again, V1 to the downside, above 70, below 70, above the third ATR channel, below the third ATR channel, and a false breakout to the false breakout to the upside. So it's got to go down, right? Well, unfortunately, it is up today. You can see it started out great. I almost hit one of my profit targets. I missed it by, looks like, a few pennies to the downside, unfortunately. I would have least liked to have locked that profit in. Again, it would mitigate it if it went up, but unfortunately it didn't quite get there, and we are up today now. This red line indicates halfway of the V1 washout bar. So if we close above 120.11, I will get out for a small loss. I did take a half a position on this because I'm shorting above the 200. So I took a half position, thankfully. Just as if I buy below the 200, I buy a half position. So, it's always important to try to be grateful for, even if it didn't work out, for the things that did work out for you. And I'm grateful I only took a half a position on this. But day's not over. If we close under 120.11, I will continue to hold this short. All right, Philip Morris. So we were talking about this earlier. I did buy this back here on the 5th of December. This is a return to value trade. A return to value trade means that we were above the 1 ATR channel. We came back into the value zone. We had sideways movement. I was waiting and watching and waiting and watching for this, but I needed the trigger. Well, the trigger came on the 5th. When we had the V1 entry. Here's day 1, here's day 2. Day 2 washes out day 1. Day 2 closes above day 1's close. I did buy it at 82.29, and you can see this has been a great trade so far. Hit a few profit targets on the way up, hit another one today. This has moved more than 1 ATR from my entry, so at this point I will be looking to instigate some type of trailing stop, like a close below the previous day's low. My ultimate profit target up here is a 70 RSI, so if we get up to the 70 and get rejected, I would lock in profits there, or if I get a close below the previous day's low. So anyway, grateful for this trade. This has been really nice. And so everything looks fine. There's nothing to do, so I'm not going to touch it. And if we have some new listeners, by the way, you hear all this machinery in the back, and that's a crew out there replacing my awning that collapsed on Thanksgiving. So they're out there with lots of power tools, so it'll be nice to have an awning, but I apologize for the noise. All right, the world famous, I tell you, SPY trade. So I know you guys hear this every day. I apologize, but if we have some new viewers, I want them to understand. But I do buy the SPY every single day at the close, and I sell it first thing the next morning. It has nothing to do with technical support resistance. It has to do with the long-term, back-tested, profitable approach with this system from Lizanne Saunders at Bespoke Invest on Twitter. She's the chief investment officer at Charles Schwab. So with this study, you have two options. Option number one, you could buy the SPY at the open each day and then sell it at the close. So buy in the morning, sell at the close. Buy in the morning, sell in the close. If you did this every single day since 1993, you'd have actually returned a negative 13.9% return on your capital for all your troubles. However, if you did the opposite, which is what I do, and instead of buying it at the open, selling it at the close, I buy it at the close, sell it at the open. If you would have done this every day, buy at the close, sell the open, buy the close, sell the next open, you'd have actually returned a positive 634.2% return. So, given the choice over time, which one would you use? Well, I'm going to use this one because it has good back-tested numbers, and it shows that it does have an edge. Past performance is no guarantee of future results. Of course, we know that. That goes for any trading system, but I love this chart. This chart shows you if you have a good profitable approach. The blue is the buy in the afternoon, sell in the morning. The orange is the buy in the morning, sell in the afternoon. But it shows you over time, if you have an edge, that edge can really work out for you. It doesn't mean it goes straight up. There's ups and downs. There's bumps and bruises along the way. That happens with any approach, even if you have a significant edge. It's just a normal random part of price distribution. So what this chart tells me is trade for the long term, right? Don't worry about what happens in the short term. Trade for the long term. And this approach of buying the SPY at the close, selling it at the open has done very well for me since February 26th. It's been responsible for about 22% of all of my profits this year. Just this one simple approach. So with that being said, I did buy it yesterday at 318.88. And sold it this morning for 313.88. I sold it this morning for 313.80. So I lost 8 cents on it. No per share, no big deal. Sometimes this has nice string of wins. Sometimes it has a bad string of losses. In May, using this approach, I lost 80% of my trades. But I believed in the approach. I kept using it. Made it all back plus more. I've been using it since February 26th, but I really like this approach. One, because it has such good data, and two, it gives me different trading approaches. Just like you shouldn't have too many of the same type of stocks, same industry of stocks, you should use a variety of different trading approaches as well. It helps smooth out the equity curve. So anyway, very, very small loss on this. I will be buying this again at the close today and selling it first thing tomorrow. First thing tomorrow morning, I should say. And then lastly, VIX. So we were just talking about higher low V1s, V2s. Well, here we were beneath the 1 ATR channel. We did buy VIX here, by the way, when it went under 30, over 30. Had that great overnight trade, like 4% or so, and sold it. I didn't like the action of the bar, and that was exactly the right place to sell it. But we were under the 1 ATR channel, back in or over the 1 ATR channel. We've definitely had a couple days down. Then I had the V2 yesterday. This is a higher low V2 back in the value zone. Here's day one, here's day two. Day two washes out day one. Day three, which was yesterday, closed above day one's close. I did buy it yesterday at 17.59. You can see it did move up nicely, almost hit one of my profit targets again. So I had two today. I had the short position that almost hit my profit target. And this one almost hit my profit target, but it didn't quite get there. So bought it at 17.59. Right now it's at 17.47. So not a big loss. My initial stop on here is halfway of the washout bar. Here's day one, day two. Day two washes out day one. Day three closes above day one's close. It should hold some support here from a Fibonacci standpoint here at the 50% of this bar. So down a little bit today, no big deal. But glad to have a little VIX. I'm not going to buy VIX just for the insurance, but I do like to buy VIX when I do have a valid signal, and this was a valid signal. Higher low V1. Excuse me, higher low V2. A man solo says, look for Keltner channels in TOS. Yes, that's correct, Andrea. I don't know if you're looking for ATR channels, but yes, that's correct. In Thinkorswim, it's not under ATR channels, it is under Keltner channels. Thanks. Yes, I found those. However, don't know what to put for average type and true range average type. All right, we'll see if Jesse's here. And I mean, you want to use a 20-day simple moving average as your baseline, and then you want to have 1 standard deviation, 2 standard deviations, 3 standard deviations to the upside, and then -1, 2s, and 3s. So hopefully Jesse will come here and we can figure that out for you. Joshua, hey buddy, good to see you. Joshua says, hey, hope you are having a great day. I am having a great day. Thank you, Joshua. Hope you are too. Andrew says, also displace factor length. Yeah, the factor is going to be like your 1 ATR, your 2 ATR, your 3 ATR, or your -1, 2, and 3. Your length is going to be the 20-day moving average. I'm not sure about the displace. Hey, Marco, nice to see you, sir. Hope you're having a good evening. Thank you for joining us. Always great to see you. Mount Doji, good to see you. Greetings from New Jersey. Okay, good. Yeah, I saw your tweet. You were looking for something in particular in New Jersey. I hope you got it. So good to see you, buddy. You have any trades on? All right. So listen, this is the time of the day where I do like to spend a few minutes, talk about some trader psychology. There's some really good Facebook and Twitter channels out there. And of course, one of the all-time best, if I had to pick one, it would be Steve Burns. This is actually from Facebook, but of course, Steve Burns is on Twitter at @SJosephBurns on Twitter. But if you have not subscribed to Steve, you have to do it. All right, you just have to do it. He puts out the best content, great articles about trading, great words of wisdom about trading. But look, this is simple, but to me, it's pretty epic because it sums a lot of stuff up. So listen what Steve says. Large losses are the primary cause of unprofitable trading across all time frames and all methods. So the common denominator of unprofitable trading are these 1 or 2 or 3 or 4 huge big losses that you have each year. That it destroys the account. So, if that is the primary cause of unprofitable trading, then that's the root cause. We need to get to the root cause and fix it. And the fixing it is keeping your losses small. And what does that mean? That means getting out, looking for setups that have good risk to rewards, meaning small risk to the downside if you're wrong, large wins to the upside if you're right, position sizing correctly, and getting out when you're supposed to. I mean, I would also add, and this comes from Steve as well, but literally, if you distill down and drill down on it a little bit more, the reason people have large losses is they are on the wrong side of the moving average, right? If you buy something over the 200, great, keep it over the 200. I don't care what you do with it. Just get out of it when it closes under the 200. Or if you're using the 20, same thing, or the 100. But the primary cause of losses really is too large a position sizing and staying on the wrong side of the moving average. Those moving averages are very important. They're very helpful. They're like trend lines. If you have an upward moving average, stay in that baby if you want to. Who knows where it's going to take you to the upside? But it's a must that you get out if it closes below. So Adhere to your stops, stay on the right side of the moving average, get out quickly if you're wrong, position size correctly, and I think you're going to do just fine. But like he says, the large losses are the primary cause of unprofitable trading across all time frames, all methods, staying on the wrong side of the moving average with too large a position size. And usually that comes down to ego. One of the worst things that can happen is you get in a trade, you think it's going to go up, it goes against you, and you know you should get out, but you're like, let's be hopeful, maybe tomorrow it will go up. Well, then it doesn't go up, it goes down. And then you're like, now it's down even further. Now it's even harder to sell. A lot of times it will come back and you're like, oh yeah, okay, I should just hold on to these babies. But every once in a while, you're going to get the mother of all losses. You're going to get something that trends down for months. And if you can't get out of it 50, how can you possibly get out of it at 40? Right? Take that first loss. It's the easiest loss to take. It stings for a second. You won't even think about it the next day if you position size correctly and just look for a better trade. But please do not hold on to big losses. Stay on the right side of the moving average. Get out when you're supposed to. So thank you, Steve. Really appreciate that. Steve has a great skill in just distilling down very important concepts in very small amount of print. So thank you, Steve. Appreciate that, bud. No luck yet. Huh, Mount Doji? Man Solo says, I believe Greg uses these, but you can go with what works for your style. Displace 0, factor 1, length 20. Yeah, and then that's for 1. And then have a factor 2 and have a factor 3. Same with the 20, then have a negative 1 with the factor 20, negative 2, negative 3. Hope that helps. Steve Burns, thanks, Greg, for sharing my post. Thank you, bud. Good to see you, Steve. Always nice to have you here. Always an honor and always a privilege. Tell you what, man, Steve's my favorite person in trading. I mean, he's made a huge change in my life and improved my trading. And read all his books. Go to his website, New Trader U. I think you'll be happy. Oh, real quick, let's take a look at some. Some of our viewers' positions. Right? You always see mine. I get bored with mine. Let's take a look at somebody else's. A Man Solo did buy this yesterday, PGT, I think. Bought it at 14.13, if I'm correct. I have a line there. I'm not sure why, but I imagine higher low V1 back into the value zone. This looks like it has moved nicely off of its highs, but definitely profitable. Not sure if a Man Solo took any profits, but it is profitable so far, up 0.92%. EGHT, dang it. This one, I think he bought this under 30, over 30. Generally, the 30 RSI is a good place to buy, giving you a good risk to reward ratio. But today, this just did not hold, and it looks like it's going to close under 30. So if I were in this trade, I would definitely get out of it with the close under 30. Dang, sorry about that, being I was hoping that would go up for you. But sometimes they don't work, right? But you have to get out when you're supposed to. Now, this one, guys, JEC, both Evan and Jesse took this yesterday. However, I'm not getting any data on this. Evan, do you have data? I went to Yahoo here. And it looks like it's up 0.92% today, which is fantastic. But it looks like the symbol got changed to J, Jacobs Engineering. So I'm not exactly sure what's going on there. You can see this is not showing today's data, but it seems like it's up. I hope it's up. Maybe you could shed some light on that. But it looks like it's up nicely. So that's good. Let's see. Jesse took the 10 EMA crossing the 50 EMA. This is a good back-tested approach. Doesn't mean it's going to work on every single trade, right? And this one doesn't look like. So, if it were me, I would be getting out here. We had the 1050 EMA cross, but it looks like it's going to close below both the 10 and the 50. This is where I'd get out. That's one option. The other option is just to wait for the 10 to cross back below the 50. So I'm not sure which one Jesse's going to use there. A Man Solo, look at this trade, everybody. A Man Solo took this V2, back here on the 4th of December, we had a double bottom with the bullish divergence. We have a low, we have a rally. We come down, test the previous low. We had MACD bars here showing negative momentum. We rallied, we came back down. No negative MACD bars. This is what Dr. Alexander Elder calls a double bottom with the bullish divergence. The V2 was her trigger, or I'm not sure if Amanda Soul is man or woman, to be honest with you. Apologize. But look at this trade. Whoa, look at that super trade. I mean, this is a huge bar. It rejected the 50-day moving average. If it was me, I'd probably take this trade off here, right? And this has been a fantastic trade. And congratulations. What is this up so far? Almost 10%. 1, 2, 3, 4, 5 days. So this has been a fantastic trade. Evan says, yeah, for some reason the ticker changed and now the charts are gone for me. But yeah, it's up 1%. Okay, good. Perfect. VWM, Addy took this back when we went over the third ATR channel. It was up initially. It's just kind of been moving sideways. I'm not sure if Addy's using a close below this washout or waiting for a close below 30. If it was a close below 30, I would imagine she's still in. It was up today. It looks like enough for a profit target. Verizon, William from Hawaii has Verizon. This has been excellent, excellent, excellent. 63.53. Make sure you look and see how it's reacting around the 70 RSI. And then lastly, Dell. So Amount Solo took Dell yesterday with this under 30, over 30 plus the V1. Down slightly today, 44 cents. So I'm not sure if Amount Solo is going to use halfway of the washout bar as a stop. That would be the closer, more conservative, or a close back under 30. That would give you a little bit more room, but open you up to a little bit more risk. So hope that makes sense. But anyway, some fairly decent trades there, especially the JEC, the PGTI, the ENBL, fantastic. So, yep, not all of them winners, but of course we know that doesn't happen all the time. It is he. Amount Solo is he. Oh, good. Glad to know that. I never really quite knew. So it's okay. Great. All right, let's take a look, see how we're doing here. So I'm slightly down today, very, very slightly. But that's how it goes. Had a down day yesterday, a little down day today. A couple days ago, made a yearly high, right? But it's nice to make yearly highs every day. But of course, it's not realistic. You're going to have ups and you're going to have downs. So, all right, well, let's go through the watch list here and take a look. Let me see. Did I miss anybody? Oh, Dirk. Dirk, how you doing, Dirk? Dirk says, hello, Greg. Are you talking always about position, right? Can you explain this, please? Boy, I'm not sure I understand. Hello, Greg. You are talking always about position, right? Can you explain this? I just talked about the current positions that I had. I don't know if you're talking about position sizing, Dirk. I'd like to answer your question, but I'm not sure I quite understand. So maybe if you could rephrase it. Hello, Greg, you are talking always about position, right? Maybe you're talking about position size. I always take a 10% position size. So if I had a $100,000 account, I would buy $10,000 worth of a particular position. But again, not sure, Dirk, that I understand. But yes, position sizing. Yes. I always take a 10%. Well, my maximum I take is a 10% position size. So if I find a good setup, I have $100,000 in my account, I'm going to buy $10,000 of that position. If it's long and I'm under the 200-day, I'm going to take a 5. If I'm short and I'm above the 200-day, I'll only take a 5% position. So, but most of the times I take a 10% position size, but that's my maximum, right? That is my absolute maximum. So, and I have a 5% maximum stop. So if I'm using a 5%, 10% position size with a 5% maximum stop, the most I can lose on any one trade is a 0.5% of my entire capital. Or if I'm taking a 5% position size, my maximum loss is only a 0.25%. It's important to keep those losses very small, right? And so that's why I position size conservatively. Hope that helped, Dirk. That's clear. Okay, good. All right. Well, let's get on to it. And thanks for coming, Dirk. Nice to see you. And I hope you come again. Apple. All right, well, nothing really happening here with Apple. We did have a false breakout to the upside yesterday. Here was the high, or a couple days ago, we broke out to a new high. We immediately came back down to the old range. This is a false breakout to the upside with a close back in the range. Right now we're up $1.55. What I'm concerned about this chart is we have a high with nice MACD readings, positive momentum. We pulled back, we made a new high, no green bars to be found whatsoever. This is called a double top with the bearish divergence. No real trigger here for me though, so nothing on Apple today. How are we doing on time? Okay. Adobe, we tested that high, didn't like it. I need to pull back into the value zone, the 1 and the -1 ATR channel. I need to pull back into the value zone, sideways movement, V1, V2. So nothing there. Advanced micro devices. We did come back into the value zone. We had this V1 worked out fairly well. Now we've made a lower high. Whenever we make a lower high, in order for me to get back into position, I need to wash out that previous low. So nothing on AMD. Boy, Amazon is just getting brutalized here. I am looking to see how, if Amazon goes down, test this previous low to see if we might get a double bottom. We won't really have a very good double bottom with the bullish divergence. This needs to be half the length of this, and it's larger than this. So. But I will see how it reacts down here around this previous low when it previously had support. Or conversely, look for a under 30, over 30. That would be a good deep dip buy. But Amazon's really underperforming the market. Boeing. Listen, so on Boeing, I'm looking for a dip to the 30 or move back up into the value zone. Couple down days, higher low V1, V2. Berkshire Hathaway, almost to the penny, tested that previous high, didn't like it. I need this to, up here we're overvalued. Anything above the 1 ATR channel I considered overvalued. I need to pull back into value. When I say pull back into value, I mean between this green line and this green line. Pull back to the mean into value, sideways movement, V1, V2 is what I'd be looking for. Okay, we talked about Beyond Meat. I bought this with the under 30, over 30, has moved up nicely, then came back down. We're still profitable on the trade. My stop is a close below halfway of the V2 or the washout bar here. So this one's fine as it is so far. Caterpillar, we were under the 1 ATR channel. We're back in the channel. Now I need a couple days pullback, higher low V1, V2. The Dow. Now, this is concerning because even though we closed above the 1 ATR channel, we are a lower high from here. So I really don't see anything on the Dow Jones. We had a high, we had a pullback, we had a higher high, we had high MACD bars, low MACD bars, double top with a bearish divergence, which signals bearish things, and the bearish things did come. So nothing on the Dow. Walt Disney above the 1 ATR channel, into the value zone. It did hold for a couple days. We had a washout. If today would have closed above 2 days ago's close here, here's day one, here's day two. Day two washes out to day one. If today close above day one, then I would have bought that, but there is no trigger here. Now we've continued to go back down. So I would be looking for a V1 or a V2 here, ideally that rejects the -1 ATR channel and then triggers, but nothing quite yet on Disney. Etsy. Well, we do have a double bottom here. Well, we did have a double bottom with the bullish divergence, bottom, deep MACD bars, bottom, no negative MACD bars. This is positive, but it looks like we're now closing under the 1 ATR channel. Ideally, move back up into the value zone, couple days down, higher low V1, V2. That's where I'd be interested in Etsy, or a 30 RSI, as well. Facebook's strong here. Lower high, don't like that. So I need to pull back into value zone that washes out this previous low before I would get interested. And if you guys hear all these power tools, I have a crew out there replacing my awning. So it's been pretty quiet so far compared to this morning, but it might get loud. So I apologize. I hope you bear with me. 5 below, nothing on 5 below here. Gold miners. pull back into value. Looks like we have a couple days of sideways movement. Looking for now I just need a V1 or V2. I'm good to go, but nothing yet. Gold, looking for a 520 EMA cross is what I'm looking for. Not there yet. Google down today. Double top with a bearish divergence. MACD line bearish divergence. Pull back into value, sideways movement. Goldman Sachs, nothing really here on Goldman Sachs. We did close above the 1 ATR channel, made a higher high. Need a pullback into the value zone. Need it to stop going down. Need to see it start moving sideways, and then a V1, V2. That would be my trigger. Home Depot did bounce off of the 30 RSI, moved up nicely. I'm really looking on Home Depot here for a close under and close back over the 200. To me, this would be the sweet spot. And I've been talking about this for several days, but that would be my sweet spot down in this range. So I'll just be patient. If it gets down there, I'll grab it. And if it doesn't, that's how it goes. Power tools. All right. So IBB, of course, I did short this. It was a great short, had all sorts of signals. Over 70, under 70, over the third, under the third, V1 to the downside, false breakout to the upside, but didn't cooperate. If it closes over 120.11, I will go ahead and lock in the loss on this one. So I'll have to watch that one at the end. Intel, nothing there. Kurt sold some puts on this. This is exactly what you want to do. If something moves side, when you sell puts, it's just move it sideways. Have that time decay work for you. Russell 2000. Above the 1 ATR channel, need to pull back into value with the V1, V2. Johnson & Johnson, overvalued, need to pull back into the value zone, sideways movement, V1, V2. Coca-Cola, overvalued over the 1 ATR channel, just starting to dip. It's the price into the value zone. So this may be interesting in 3 or 4 or 5 days. If we can come into the value zone, sideways movement, show that the selling stopped, then have a reversal bar, V1, V2, I would get long there. Lockheed Martin, nothing there. MasterCard, lower high, don't like that. I would need to wash out this previous low for me to get interested. McDonald's, nope, nothing. Altria, above the 1 ATR channel, it's very strong, needed to pull back to the mean, needed to pull back into value, sideways movement, V1, V2. Merck, overvalued near the 3rd ATR channel, rejected the 70 RSI. If I had been in this position, I would be getting out today with the rejection of the 70 RSI. Microsoft, down, interesting. Lower highs, don't like all these lower highs, I'll tell you that. I don't like these lower highs, so nothing there. Netflix, whew, glad I got out of Netflix yesterday. Remember, we took this above value zone, into value zone, couple days sideways movement, washout, reversal. That was a beautiful return to value, sideways movement, V1, V2. It went up for us. We hit one profit target, but then it closed below halfway of the washout bar. I got out, thankfully. Otherwise, we would have had to endure this. So this is a good example of why it's important to stick with your stop losses. And your stop losses, if you're basing them off of good technicals, very likely they're going to continue to go down if you don't get out. Nike, overvalued, 3rd ATR channel, need to pull back into value. How's our Philip Morris doing? Okay, so return to value, sideways movement, V1, nice trade, hit one profit target off of its highs today. Trailing stop now, close below the previous day's low, or some kind of rejection to the upside of some major moving average or the 70 RSI. PayPal, above the 1 ATR channel, into the value zone, sideways, 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 sideways. Today would have been a great V2 to the upside, especially with this sideways movement, but now it has gone back down. If we could get a washout tomorrow, reversal back up, V1, V2, I would be interested then, but nothing today. Looks like the NASDAQ has gone negative on the day. Again, lower high. I don't like all these lower highs. Silver, I've been waiting for a under 30, over 30 on silver. We do have a bullish divergence. See the low? See how deep these bars are? See how we rally? We get some green MACD. Now we're lower, but the MACD bars are more shallow. This is a double bottom with a bullish divergence. This is a bullish setup, but we just don't have a trigger. What would be the trigger? V1, V2, under 30, over something like that. So I'm going to be watching silver carefully here because it is starting to look good, but I just don't have a trigger yet. SPY, of course, we had the very, very small loss on the overnight SPY trade. Bonds above the 1 ATR channel, into the channel. They are kind of hanging out here, sideways movement. Now I just need a V1 or a V2. That would get me long. Tesla, big day. I was looking to buy Tesla. I would have bought Tesla on this V2, but it gapped. And I have a filter that says if it gaps on the V2 day, I can't take it. Unfortunately, because it would have been a fantastic trade. But anyway, if any of you have Tesla, glad that's going up. Twitter, lower highs again. This high is lower than this. I would need to wash out this previous day's low here and then look for a V1, V2. How we doing on time? Oy. United Healthcare, it's been above the 1 ATR channel. I can't mess with it up here, waiting for a pullback into value. We are back in value now, but I need some sideways movement. I know I sound like a broken record, guys. Sorry. Oil's had a nice move above the 200. It's holding above the 200. That is bullish, but it's too high. It's too high for me here above the 1 ATR channel. I need to pull back into value. The VIX, of course, oops. The VIX I did buy yesterday with this higher low V2. We make a low, we rally, we come back down a couple days. V2, day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. I bought it at 17.59. It's at 17.56, so pretty close to break even there. Verizon, very, very nice there. William has that from Hawaii. It's moving up nicely. Just make sure you have an exit plan if we reject things to the upside or to the downside. Walmart, sideways movement. This one will move strongly. I just don't know what direction and I don't know when, but it will. Eventually it will. This is like winding up a watch, right? This is like winding up a watch tight. It's going to spring one way or the other. We just don't know which way it's going to go. Energy, having a good day today here. Under the 1 ATR channel, into the value zone. A couple days down would give me a higher low V1, V2. Financial sector did lose the low of that gap up today, needing a pullback into value. How we doing? Okay. Real estate, lower high, pretty strong to the downside here. Nothing here. I'd look possibly down here for a buy at the 200-day moving average. Utilities, nothing there. I did take the 520 EMA crossover. It went up a little bit for us and then down. I got out yesterday when we closed back below both the 5 and the 20. I got out quicker than waiting for the 5 crossing back below the 20. Doesn't mean one's better than the other, but the way this closing back below both moving averages is a little bit more conservative. And healthcare has had a very, very strong run. Need to pull back into value with the V1, V2. So with that said, AT&T did look pretty good. And that isn't even on my watch list. Evan pointed that out. But the key is now it is, see, here's day 1, down day. Earlier we had a V1. Now we do not have a V1. Yesterday's close is 38.04. Now it's at 38. So if it closes back above 38.04, I will take a position in this higher low V1 MACD crossover, but only if we get the trigger. So other than AT&T, I do not see anything that I am interested in today. A man solo says, regarding ENBL, do you think $10 is a good psychological level? Oh yeah, I mean, round numbers are always kind of magnets. You know, a lot of times they'll fail, but this is above. But on this particular trade, I mean, of course, do what you're going to do, right? I mean, but me personally, after a 10% gain and a rejection of the downward sloping 50-day moving average, I would take profits here. I'm not telling you to take profits, but I'm just giving you my opinion. But, you know, it rejected the third ATR channel and the 50-day moving average. You know, you trade it how you like, of course. I'm just giving you my opinion, but fantastic trade, man, solo. Very, very nice. Evan says Spice has had a couple of wild days. Whoa, look at that. You know, honestly, not from a trading standpoint, but buying something, I like the idea of this company. You know, Richard Branson's the space tourism, but went down. We find some support, but then it just took off its high today. But my gosh, huge move. Mount Doji says nothing good is triggering my engulfing scans. Yep. Dirk said that's clear. Yes, Dell stop loss if cross back under the 30 or it doesn't go anywhere by end of week. Okay, so a Man Solo not only has a price stop, but he has a time stop as well. So, okay, so the stop loss is a close under 30. All right. How are we doing on time? 5 minutes. Southwest Gas. Yeah, it does. Under 30, over 30. V1 back into the value zone. Positive MACD. Looks pretty good, actually. Bing He. Congrats to those who took JEC. I took EGHT. Has a higher probability due to the bullish divergence. Yeah, so... yeah, GEC. Whoa, it's up 1.41%. That's fantastic. That's fantastic. Yeah, that dang EGHT's down. Sorry, Bing He, buddy. Evan, yeah, AT&T letting me down at the last minute here. Well, it's going to be close. Frank says Walmart does look tempting to hold into Christmas. Yeah, I mean, there's a lot of consolidation there, Frank, on Walmart. We just don't know we don't know which way it's going to go, do we? Guess the key here would be wait for some kind of signal, right? Steve Burns says, I am looking at SPCE for a future item on my watch list after volatility settles down. Oh, are you really, Steve? Great, great, great. I've been watching that. I just like the idea. I like Richard Branson. But you know, the market didn't like the price, but you know, something happened. I'm not sure. All right, let's take a look here. Current positions, Beyond Meat's doing fine, up a little higher now. That's good. IBB, looks like I'm going to have to get out there on that short position. Philip Morris giving a lot back, but at least we hit one profit target. Going to buy the SPY at the end of the day, and VIX is rallying now. Now it's a profitable trade, so that's good. Hey, I might be break even today. All right, so the key here for my new position here, what do we have? Oh, that's right on the bubble. AT&T is right on the bubble, and I'm going to have to. It's right on the bubble. And I'm going to have to watch IBB really carefully. But IBB is a current position. It holds more weight for my attention, right? Because it's a current position. So I'm going to have to defer to that. Of course, I want to hold it. You know how it is, right? You want to be right. All these bearish indicators here. But I have to stick with the rules, right? If it closes above 120.11, I've got to get out of this, baby. AT&T is right there. I don't know if I'm going to be able to pull this off. All right, I'm going to just call it on IBB, take the loss. Okay. Right? Taking loss isn't that hard. You just do it. That's all there is to it. You just take the loss. AT&T. Yeah, it looks like it's going to be okay. Maybe. All right. Okay. I actually pulled it off. Wow. Wow. That was 2 times difficulties, guys, because I have to trade 2 accounts on the same position. That was awesome. All right, so IBB, I did get out. It did close above my stop. Don't like to get out, don't like to take the loss, but I follow my rules, guys. And in the long run, that's why I make money trading, right? So, all right, IBB was fun while it lasted, but not really. But it was a small loss, so, you know, it's allowed. Remember, large wins, small wins, break-even trades, small losses. If you find yourself in any of those categories, you're doing fine. You're in the correct category. You're doing things to be a long-term successful trader. If you have big losses, it's a different story. So it was a small loss. I took it. I stuck to my plan. I didn't like to. I never like staying to my plan when I'm wrong, but you have to do it, right? So Beyond Meat, nice day today. Fine, fine. Philip Morris, nice little rally at the end of the day there. Did hit 1 profit target. Good. SPY. What did we buy SPY at today? 313. 53. Wow, they're doing some serious work out there. Hope that's not too loud for everybody. All right, so that's the new entry today on the SPY, 313.53. VIX ended up, blah, 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 blah. I'm down 1 penny on the trade. All right, and then AT&T did close above 38.04. So good to go there. And my AT&T was at 38.06. All right, so yeah, nice higher low V1. Does that mean it's going to go up? Absolutely not. I wish I knew it was going to go up, but what the market's telling me here is that it tried to go down, had a new group of buyers that pushed it back up, closed above the previous day's low. It's above 50 RSI. It's above the moving average to the downside. We had a MACD crossover. Everything looks good, but it doesn't mean it's going to go up. Everything looked good on the short on IBB, but IBB's been a short killer lately, right? And it, you know, didn't kill me, but it did go up against. But I like this setup. I mean, it's everything I'm looking for. Higher low V2, V1, couple days down, rejected all the moving averages, MACD's positive, above 50 RSI, it's great. What's going to be my stop? My stop is a halfway of the washout bar, right? From a Fibonacci standpoint, halfway. So about, if I get a close below, that's about the halfway right there. If I get a close below approximately $38 tomorrow, I'll get out, right? So it gives me a good small risk downside, hopefully. I mean, it could come crashing down here, you never know, but from an ATR standpoint, you know, even a small move down, I'm wrong, I get out, I put my toe in the water, and you know, and checked out how I like the temperature of the water. If I didn't like it, I didn't like that, I just get out with a quick loss. If I'm right, well, I have the potential, you know, to possibly come back up here and challenge new highs, third ATR channel, 70 RSI, all that kind of stuff. So I don't know if it's going to go up, but it gives me a good risk to reward ratio with good confirming indicators. So again, Beyond Meat, current trade, we've been in that trade for 3 days, profitable. Philip Morris, we've been in that trade for 3 days, nice and profitable. SPY, of course, that's the overnight SPY trade. We've had some ups and downs. VIX, did buy that yesterday, down 1 penny on the trade, and then took the new position on AT&T, and then got out of the loss today on IBB. So all in all, not too bad of a day, slightly down, very, very slightly down, but that's fine. That's fine. We've had a really good run of it. So That's that. So listen, I want to get to more questions and comments. Before I do, just real quickly, hope you don't mind, but I just want to put in my little daily plug, let everybody know that I do teach private one-on-one coaching and mentoring lessons in the evening time via Skype. I love to teach. I've had really good success with my clients. I have a course. It's 5 sessions, 2 to 3 hours per session. I teach you everything I've learned over the last 24 years as a full-time trader, teach you everything I've learned from all of my mentors and coaches and things that I've developed and how I put them all together in one approach. And, you know, if you're new to trading, boy, there's so many different ways to trade, so many ways that you can look at the market. It can be confusing, it can be stressful, but, you know, what I teach, you know, I basically teach 4 different type of setups: higher low V1s, return to higher low V1s, V2s, return to value, V1s, V2s, moving average crossovers, and deep dip buys. And regardless of what the market's doing, going up, going down, sideways, you know, I have an approach. So I've had really great feedback from my clients and really enjoy teaching, really enjoy working with them. And, you know, if you're interested, reach out to me. My email's in the description of this video. You can also reach out to me on Twitter. But, you know, but before you decide that you want to take the class, I do like to have just kind of a quick get to know you Skype call with you. There's no obligation. It's totally free. Half an hour. I just want to know more about you. You know, what your trading is like, what your approaches are, what your challenges are, and then what your goals are. And then I will put together a lesson plan to hopefully help you achieve those goals. So it's $1,000, but I think it's well worth the money to be able to, you know, put together everything, for me to teach you everything I've learned in the last 24 years. And who knows how many tens and tens of thousands of dollars that I spent to learn this all. So, you know, if it's of interest to you, reach out to me, email, description in this video, or on Twitter. Just send me a message. And then if you like today's podcast and you found it valuable, please do me a favor, hit the thumbs up button. It helps promote the channel out to more people. On YouTube, there's a lot of people that desperately need help with trading, and it literally can ruin your life, their financial life, their personal life, the relationships. And you know, that's why I started this channel. I want to help people learn how to trade and make money and stop losing money, right? So you can help me reach them via YouTube, right, by just hitting the thumbs up button. So okay, there's my little plug, and let's take a look here. Okay, so Evan, did you take AT&T? So I did take AT&T. Thanks for pointing that out to me. No pressure. I hope it doesn't go down. It will be your fault. No, I'm kidding. Thanks for pointing that out. Evan says, exciting last minute. Hey, Kurt, what's going on, bud? Good to see you, my friend. Kurt says, hey, Greg, Steve, and all. Looking forward to the podcast you guys did together. Nothing new for me here, but yes, enjoying my put trade at the moment. Okay, that is good to know. So, Intel is Kurt's put trade. So I'm just going to go over that real quick. So I do sell puts, which means that as long as the price stays above the strike price that I sold the put at by the end of the contract period, I am able to keep all the premium for selling that put. And when I sell puts, I don't just base it upon the Greek numbers with options. I base it upon support levels, not in one time frame, but in 2 time frames. And Kurt on the daily sold puts on Intel of $52 on the daily. You can see the $52 mark. It does have some nice support with the 100-day moving average. So is that enough to sell puts there? No, it's not, but it's a good starting point. So on the daily, the $52 mark, the $52 strike price has support at the 100. Well, let's look at the weekly now and see if we can find support on the weekly. Well, the weekly is smack dab in the middle of the 1 and the -1 ATR channel. It's basically right at the mean, at the midpoint of the channel. This should offer some kind of support here. So again, on the daily, the 100-day moving average is acting as support at the 52. On the weekly, the midpoint of the weekly channel should offer some type of support. And then on the monthly, $52 is just right under the 10 EMA on the monthly. So it does have, the $52 does have some kind of theoretical support, right? That's the best we can get at the $52 mark on the weekly with the 10 EMA above it. On the weekly, the midpoint of the 1 and the -1 ATR channel. On the daily, the 100-day moving average. So when I sell puts, that's what I like to do. I like to see a confluence of support on not one time frame, but 3 time frames. So anyway, that is working out for you fine, Kurt. I know that because it's just moving sideways, eating up that time decay for you, which is good for you. A man solo, for the record, got out of ENBL. Oh, I'm glad to hear that. Look at this trade. Look at this trade, guys. Double bottom, bullish divergence, V2 entry. I mean, this is as good as it gets, and a very clear exit signal, in my opinion, with the rejection of the 3rd ATR channel and the 50-day moving average. So, fantastic, bud. Very nice. Greg, also notice that your stock usually consolidates after. Also notice this stock usually consolidates after more than one ATR daily move. Yeah. So, here's the thing, guys. In general, small bars lead to big bars. Big bars will lead back to small bars. This is a really big bar. So generally, almost on any stock, a big bar will lead to sideways movement. Small bar sideways movement. Small bar sideways movement will eventually lead to large bars. I mean, it happens all the time. Small bar, small bar, small bar, small bars, big bars, big bars, big bars, small bars, big bars. See how that works? So yes, that is true. Usually when you have big bars, they will lead to sideways movement. Evan says, yes, I did take AT&T and I got a half-cent head start on you. Oh, did you? You got it at 38.055? All right. Well, this is my position, but I'm going to put Evan up here so I know who's responsible for getting me in this trade. Just kidding, bud. JT said, sold last month AT&T 3650 puts expiring this Friday. Oh, nice. So, JT, good to see you, bud. Thank you for coming by. So JT sold 3650 puts down to about here. Oops. Yeah, that's right. 3650. And I like his thinking, right? Where's the support that he used for, at least on the daily, was 3650, right here at the 100-day moving average, right here at the 3rd ATR channel. Let's look on the weekly, see what that looks like. Yeah, close to the midpoint, have the 20-week above you for some support. And on the monthly, not as great on the monthly, but you do have the 5 days. So anyway, so what that means is JT will collect all of his premium unless AT&T falls 4% by Friday. And in that case, he has 2 options. He can just get out, take whatever win or loss he has there, or if he wants to buy the shares down there, then he's responsible to buy them at $38.50, but he'll be able to keep the premium that he got. Gamer Scott says, Beyond Meat has experienced a big squeeze in the Bollinger Bands, is it? I don't have Bollinger Bands on here, but in a strange way, the third and the -3rd ATR channel are similar. But yeah, we're squeezing. We are going sideways. And so just like I mentioned to Evan, or a man solo, small sideways bars lead to big bars. Big bars lead to small bars. That's why, guys, when I have a return to value trade, it's above the value zone. I want it to come into the value zone. That's why I like to see the sideways movement. I like to see the sideways movement because this sideways movement leads to big moves. You see why it's so important to have the sideways movement? Evan says, I'm kind of lost what to do with JECJ since on my platform the chart is brand new today. Not sure how to set my profit targets anymore. Yeah, I was thinking the same thing. Because I know Jesse and Evan have this. And what did it end up with today? 1.41%. Well, 87.13. Let me see if I can help out here. So today we're at 87.13. Somewhere in here, let's take a look where the 50 is going to be. So the 50 RSI is going to be up at about 90, 95. Sorry about the power tools, everybody. So that's up there a ways. You know, I guess you could base it off this a little bit, just on Yahoo, and you know, be aware that if we got up into the approximately $91 or 89 to 90, that might be a place to maybe take it off. And of course your stop is going to be a close under 30. Man, that's going to be tough, but I can move this around. Oops. I can move this around even though I don't have the data. At least we'll know what the RSIs are. So if I can help you that way, let me know. That's a tough one. That happened to me on VIX one time. They changed VXX to VXXN, or I can't remember. They changed it, and then my charts were all gone, and so I was completely lost. So I feel you. And Mansola says, Steve Burns, I was looking at SPICE over the weekend and hoping for a V1, V2 this week, but it's probably too volatile to show a proper setup. Again, small bars lead to big bars. These big bars will probably lead to small bars. Yeah, I don't know what to do with that. I mean, well, I do know what to do with that. We're above the 1 ATR channel. I need to pull back into value, some sideways movements, because sideways movements usually lead to big movements. And so that's what I would be looking for, is a pullback into value. But here, this isn't a great bar right now. This looks like some short squeezing, but this definitely was a time to buy down there. Evan says, yep, 38.055. Nice. Oh, JT has AT&T at 37. How come you got to be a one-upper, JT? We had to buy at 38.06 and you got in at 37? No, I'm just kidding. Did you buy this V1? Oh no, you got it at 37. Anyway, fantastic. Fantastic. Hope it goes up for all of us. Frank says, the bar is usually where I find my broker. Good. Good. Evan says, exciting last minute. What happened in the last minute? Let's take a look. Okay, guys, so you know how I talk about the volume comes in the last minute? Look at the volume during the day. Look at the last minute. See where that's all the volume was? I mean, let's look at Apple. What did Apple do? Holy smokes. Look at the volume in the last minute. Man, Apple really came down then, didn't it? It really sold off and then rallied strong into the last couple of minutes. But again, last minute has the most volume. Let's check the Qs, or let's check Amazon. Look at the volume, see? Those last few minutes is really when the volume comes in. Compared to the rest of the day, just nothing, right? That's why I like to make my decisions, because that's when the big boys come into play. JT bought it last week. Nice trade, JT. John, hey John, good to see you, sir. Thank you for coming by. How loud is the power tools out there? Like, I think I'm used to it now. Is it loud on your end? John says T has activist investor Elliott management. Well, I do like the setup. Let's look at the weekly quickly. Oh, this is a perfect example, guys. I don't talk about this enough. Triple screen, taught to me by Dr. Alexander Elder. Triple screen is when you look at a chart in 3 different time frames. 3 time frames. If I'm trading on the daily, I want to first look at the monthly. Monthly, are we in an uptrend? 100% we're in an uptrend. No doubt about it. Any uptrend is going to have a small dip. That's when you go to the weekly to look for that dip. Not quite in the value zone, but came down quite a lot. But this is a dip. It does not hurt the chart structure on the monthly, but it is a dip on the weekly. When it dips on the weekly, I want to look for an entry on the daily. Well, there's our entry. Higher low V1. Oh, okay. Not too loud for you. Okay, good. Earlier, man, it was like Mad Max. Rivets, saws. I was thinking, where else can I go in my house to do this podcast? But I have all my setup. I'd have to move everything around. I was like, I don't think it's going to work. I went out and I asked them, I'm like, hey, do you guys take a lunch? Nope. Okay. I was hoping that they would take a lunch. I actually asked them, would it be possible? And they said, well, not really. And I said, all right. But they said most of the loud stuff will be taken care of before your show starts. So. All right, so PGIT for Man Solo looking good. Bing He not so hot on the EGHT. Dang it. Sorry, buddy. Although, you know, if we had a V2 tomorrow back over 30, that would be kind of nice too, but sorry, that's how it goes. That's how it goes. I wish we could win them all. JEC, of course, doesn't show today's data. But up nicely, so congratulations to Evan and Jesse on that. Jesse got a little whooped up on here on his 1050 EMA cross. Me personally, I would have gotten out because it closed below both the 10 and the 50. He may have opted to just use the 10 closing below the 50. Doesn't mean one's better than the other, but I actually am switching now to a close below both of the moving averages that form the crossover. It's just a little bit more conservative. Sometimes it will bite you. This might just go heading up forever now, and I would have gotten out here, but that's how it goes. But a lot of times too, it might, when you actually have the cross under, you may have a big move down. So whatever approach you use, there's pros and cons. Just because you're using an approach it doesn't work doesn't mean switch over to something else, because as soon as you switch, you might run into that approach's drawdown. So I think it's good to, you know, keep steady with what you're doing, but it's okay to make adjustments as well. I've made some adjustments here at the end of the year. I do that every year. You know, I look at my trading for the year. I try to be very objective and go, okay, where do I need help? Where do I need improvements? And then I make slight adjustments. Evan says, no lunch. I need lunch. I need lunch too. I'm freaking hungry. Bing He says, I exited EGHT. Yeah, I imagine that you did, but I'm proud of you, Bing He, that you exited, right? Who knows? This could go down for a long time, so shoot, darn it. What did UNG, do you still have UN? No, you got out of UNG. And UNG was up slightly today, so nothing really there. JT says, aside from RSI and MACD, I use CCI. Let's see. Where do we go? So that's another kind of channel, isn't it? Right? What is that called? Commodity channel or something like that? FWIW. Our local Walmart is so busy, hard to find parking. Not sure what FWIW means. But again, let's look at Walmart. Sideways movement. I mean, we are definitely going to be breaking out some way or the other. Who knows? Let's look at the weekly. Yeah, it's in an uptrend. Monthly, in an uptrend. Weekly, coming back into value. Daily, sideways movement. So this one's probably going to go one way or the other. I guess I would have to be biased to the upside because of the long-term trends are to the upside, but I would just need a solid signal here to take a trade. All right, everybody. So listen, if you have any other questions, anything you want me to comment on, please let me know. JT says, yes, commodity channel indicator. Okay. Interesting. I'll have to take a look at that. A lot of different indicators out there, right? And if you use them consistently, they're probably all going to be fine. Andrew says, for what it's worth, what? Frank says, for what is worth as a dingle? Oh, all right. Sorry, I'm not hip like you young people. I don't know. Okay, for what it's worth. Now I understand. Gotcha. As a signal. All right, I'm a little slow. I gotcha. Thanks, Andrea. Amansel. Thanks again, Greg. Much appreciated. So listen, Andrea, I have a call tomorrow with Jesse. Tomorrow night I have a call with Jesse. I will get the specifics, exactly how he has them for the Keltner channels, okay? And then check in with me, and then I will share that with you maybe Thursday or Friday if you haven't figured it out in between. Does that sound like a plan? And I'll ask him exactly, and I'll have him show me exactly how he does it on the Thinkorswim platform. FWIW. So I learned something new today. Now I'm like hip. I know the little acronyms. William says, woo, I didn't get it either. Good. I'm glad. I'm glad you didn't get it, William. I didn't want to sound like the only person that doesn't know anything. Andrea, that'd be great. Okay. Yep. He's a real pro on Thinkorswim, and he's helped a lot of my other students as well. So, but definitely the moving average is 20. The factors, you're 1, 2, 3, 4, 5, or 6 to the upside, and you're negative 1, 2, 3, 4, 5, 6. But the other one that you mentioned, the displace one, I'll ask him about that, okay? Do you have any trades, Andrea, going on? All right, so SPY's up in after hours, AT&T's up in after hours. Looking pretty good. Oh, we don't need to be hip, just good at trading. I totally agree. I totally agree. William says JEC won't come up on my charts. Yeah, we talked about that, William. I think they changed their stock symbols. I think the symbol now is J, but that doesn't come up for me either. But maybe tomorrow it will on your charts. Maybe it's just a switch over thing, but J is the symbol, I believe, for JEC now. Frank says, I'm older than all of you. And wiser. Right, Frank? Andrew says, all I have now is a gold call, TLT, and FRL. What's FRL? Um, I can't pull up FRL. All right, well, gold's in the value zone. Positive MACD, that's something. TLT staying in the value zone. So Andrea is a little on the cautious side here with her positions. We have a down move. She'll probably do just fine. Andrea says, I've been holding off on doing much more until I get more of this down. Okay, sounds good. You know, I have those 4 lessons, Andrea, in the description of this video. They're free from my YouTube channel. I don't know if you've watched those, but there's 4 links in the description here of, you know, one of them is, you know, my trading approaches. That might be helpful for you to watch, just a thought. FYIW. A man solo, displace equals displace the line over time from the bars that are used to calculate it. So introduce a lag in the study. All right. Well, I know Jesse's has his just right, and he does use Thinkorswim, so I'm going to definitely just get the exact things there for Andrea. We'll try in the AM. William can't get FRL either. No, sorry, FREL. FREL. Oh, okay. Had a crossover recently. That's positive. MACD is positive. We're over 50 RSI, so that all looks good. All right, everybody. I am going to go check and see on my awning here, see how that's going. Cut him a check. So, Andrea, thank you for coming by. I appreciate it. William, nice seeing you, sir. Appreciate you coming by as always. Frank, nice to see you, bud. A man solo, thank you. Thanks for your input. Nice trading. Thank you for coming by. JT, good to see you. Looks like you're doing well with your trades. Thanks for coming by. Always nice to see you. Bing He, good to see you, buddy. Hope you have a good day in Singapore there. Sorry about that EGH trade. And, you know, just one trade of the next 1,000, right? So you'll have winners there too. John, good to see you. Thanks for your information on AT&T there. Evan, nice to see you. Appreciate you coming by as always. Gamer Squad, that's David in Denver. Thank you. Always nice to see you. Kurt, good to see you, my friend. And if you have any questions for me, anything I can help with, please let me know. Steve Burns, thank you, bud. Always nice to see you, and always appreciate you being here. I'm always excited when you're here, and I know everyone else is. And so thanks again. Appreciate it. Let's take a look here. Mount Doji, have a good trip in New Jersey there. Hope you find what you're looking for. Dirk, good to see you, Dirk. I think Dirk was first time here. So appreciate you coming. Hope you come back. If you have any questions, let me know. Marco, of course. Good to see you. Hope you have a good evening, Marco. And if there's anything I can help you with, you let me know, okay? Joshua Kaufman, always nice to see Joshua. Appreciate you coming by. And Don Robbins, of course. One of my first students is Donnie. Good to see you, bud. Good to see you. Hope you come again. And William Green. I think I said goodbye to William, but it doesn't hurt to say goodbye twice. And Shelton Johnson. Good seeing you, Shelton. Thanks you for coming by. All right. Well, that's it. That is it. Oh, yeah. Good, Andrea. Watch those. Think they'll help. Let me know if you have any questions, okay? So, all right. Hope to see everybody tomorrow. Have a good rest of your day. Oh, and make sure you go out and do something nice for somebody today. A smile, a wave, or just be pleasant. We need more of that in this world, right? So, all right. Take care, everybody. We'll see you later. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.